Hey guys, welcome back to the channel. My name is Alex, and today we start a very important series for you traders out there over entries and exits. This is one of the hardest skills to master as a trader, and today in specific we're going to be covering loss aversion and how this affects your entries and exits. So before we can even get into knowing when to enter, how to enter, it's important you can conquer your emotions and the psychological aspect behind the entry and the exit before you can actually improve the entry and exit. So, guys, I hear it every day working with students, members, and traders all the time. They always tell me, "Oh my God, my entries suck. Oh my God, my exits suck. If I could just nail my entry or my exit, I'd be such a good trader." And so once again, I hear this all the time, and if this sounds like you're going to love this series. So make sure you're subscribed and make sure you drop a like on the video. Let's go ahead and get started, guys. Fix number one. This is the first fix of many. It's right, like I said, it's going to be a multi-video series. So we're going to add in easy to make fixes each video to help you, hopefully by the end, master your entries and exits. Fix number one will be you're paralyzing yourself, and you have to realize that, okay? Because it's not that you don't know when to enter or when to exit sometimes. It's just that you are unable to act on the opportunity, on the entry or the exit when it has finally come. And I'll actually explain this in further detail here, but for example, let's say a guy wanted a short overstock. Okay, well, guess what he does? He shorts it here and cuts a loss there. Okay, so this was an example of a bad entry and an exit, but the guy was right on the trade. He knew to short overstock for a 20-point drop. So phenomenal, but if he knew the stock was going to drop, why'd he cut a loss right here? Okay, this is exactly when you should be adding to the position if you're confident in your abilities and you know what you're doing. But what ends up happening is, okay, you get in just a little bit early on your entry, so now you see on your screen big red number minus 2K. Now you're freaking out because you're down. Okay, does your P&L affect what the market's actually going to do next? No. So forget your P&L and think, what's going to happen next? Well, think about this. The stock's already up 25% in less than 14 hours, so what's it most likely going to do? Drop, because that's an unsustainable rate of growth, and so it's unlikely to keep moving higher at that rate. Okay, so when everyone freaks out over the P&L, thinks they're down $2,000, what do? They cut the loss. That's exactly when you should actually probably be buying more puts and cashing out for a $20,000 profit here. You see what I'm saying? So you cannot let your P&L, you cannot let your emotions and your fear of loss conquer your decision making, because your decision was fine. Your decision was perfect. So that's where loss aversion comes into play, which is what the main topic of this video is about, loss aversion. We weight losses greater than we do gains, okay? So let me tell you what you feel more emotions towards. When you're down $1,000 or when you're up $1,000. You feel a lot worse when you're down $1,000, right? You feel more emotions there. Humans, okay, by nature, do this. And so humans also weight losses 2 times more than they do gains. So this means that pretty much, for example, if someone tells you, hey, I'm going to flip a coin. If I land heads, you lose $2,000. If I land tails, you win $4,000. Most people say yes to this bet. Why? Because they believe the gain is good enough. They believe the gain makes it worthy of the gamble. Now, if we change up the numbers just a little bit, now a guy said, hey, if I land heads, you lose $2,000. If I land tails, you win $3,000. Most people will say no. And that's a highly irrational, illogical decision, if illogical is a word, I hope it is. Because why? Well, if you flip a coin 1,000 times, you're actually going to make $1,000 500 times here. That's going to be $500,000 you'll make in profits on this coin flip bet. So this is highly favorable, but once again, this is surface level psychology here, where humans weight their losses 2 times more than the gains, which means they're not willing to take a 1.5 risk. Most people aren't. This is for most people, okay? Hopefully this makes sense, guys. The math, right? This is a 2 times reward. This is a 1.5 time reward. Okay, most people will not take the 1.5 time reward, which is highly, like I said, illogical, if that's a word. Okay, should be, I hope. Okay, so once again, with this super favorable bet, if you actually calculate it, do the math, you're going to make way more money than if you don't take the bet. But once again, people don't take the bet because why? Because they're thinking emotionally, not rationally, not logically. And so this is how you pass up on millions, thousands, hundreds of trades that are highly favorable, but once again, you're so focused on the loss that you're not willing to take the gain. But if you flip the coin 1,000 times, you're going to make a lot of money with this reward here. And this is just a 1.5 reward. This isn't even considering the trades, we take, which are 3 times reward, 5 times reward, 6 times reward that we put together all the time. Okay, and so once again, if you can't even take a 50-50 bet that offers you 1.5 to 1, you're just going to miss out on so many opportunities. And once again, if we go to do the math, right, after 1,000 coin flips, you'll make $25,000 that someone would have made $0 on. Why? Because they didn't even understand that this is a highly favorable bet, because they're, once again, acting on their emotions, not based on logic. And so when you can realize this and start to weigh a loss and a gain the same, then you're going to see your trading take off to the next level, because you're no longer going to be affected by the emotions of the loss. And that's what bites so many traders in the butt, is because they're too scared to lose money that they can't make the money when it's there and when it's time to make the money. You see what I mean? So boom, even with a horrible risk to reward ratio like this, if you repeat the 50-50 coin toss, you will be profitable. And so this just shows you don't even need to be a good trader to make money in the market. Look at this example. I mean, that's horrible. Who wants a minus 1,000 for the potential to win $1,001? Nobody wants that, but this does show you, if you can rinse and repeat your own process, even if you're not that good, if you can stay rational and act logically and not, freak out when you're in the red, right? You will end up profitable. And remember, this is a 50% chance bet. That's, assuming you're a terrible trader and you only have a 50% win rate. For example, if you trade with us, you probably have a 75% win rate. Yet you'll be freaking out when you're down a little bit. But if you'll trust the process and understand that we don't have a 50% chance win rate, so it's not even going to be close to these examples, it's going to be way better, and we're offering a greater reward, then you understand that this is an unstoppable process that's going to make you more than 25,000, more than 50,000. Okay, but you do have to trust in the process. And as soon as you step into weighting your losses greater than your gains, that's where you go and mess up the process. You can't weight your losses more than your gains. You need to understand that minus 1,000 is the same as plus 1,000. Minus 500,000 is the same as plus 500,000 in value. Okay, the only reason you feel more emotion is because as humans, we weight losses greater. But when you can break that barrier, when you can start to see your wins and losses as equal, that's when you can trade to the best of your ability. So I hope you can see why so many people get emotional and mess up amazing trades, and I hope you can see why it's not necessarily always about the entry and the exit. It's about making sure you're ready to act rationally and enter when it is time to enter. Guys, it's okay to enter early, but it's not okay to not enter when it is time to enter. You see what I'm saying? And that's what a lot of people do, because they're not emotionally stable at the top when it's time to be buying puts. Okay, so always put yourself in a position, put yourself in a mental space that you're able to pull the trigger at any time, no matter what happens. And make sure you're always comfortable with the loss. That way, you can equally weight your losses and your gains and act rationally and logically at all times. Because I promise you guys, once you get good at this, for example, once you've taken our course and once you join our trading group, it's no longer about skill, it's about your emotions. And you've always heard, trading is 90% mental, 90% emotional. And it sounds like BS, and it is BS, because if you're a dog shit trader, it doesn't matter if your emotions are bad or what. If you don't even know how to trade and find the right trades in the first place, forget it. Okay, but assuming that you are good, that you do have guidance and you do know which trades to take, now you just got to beat your emotions, keep hammering away at the 75% probability with the risk to reward that we have, and you will come out profitable, but you cannot freak out when you're in the red. So hopefully that makes sense, guys, and hope you guys enjoyed the video. I hope this also makes sense why we went over the emotional part of entries and exits, because if you can't even be in the position to take the entry, how can we improve your entry in the videos to come? And that's why we had to make sure you're even in the right mindset, in the right space to be able to take it and pull the trigger. And now that you're going to be able to pull the trigger when you need to, now we can start working on the timing of the entries and the exits in further videos to come. So guys, thank you so much for watching. My name is Alex. Don't forget to leave a like on the video and let me know. Have you noticed that you weight your losses more than your gains? Have you felt that when you're down 1,000, you're freaking out, but when you're up 1,000, you don't feel nearly as much? Well, once again, that's human nature, and I highly recommend studying this topic. For example, loss aversion, and just here's actually a great book for you to read if you're interested. Thinking Fast and Slow is going to help you think a lot more rationally. It's going to help you maximize your probabilities, whether it's in the market or just anything you do. All right, guys, I hope you enjoyed this video. Don't forget to leave a like I said, and I'll see you soon. Thank you. Bye.